Hi everyone, welcome along. It is Thursday the 9th of July and I wanted to make a quick video just to give you an update of where I think we are positioned, particularly in terms of the dollar and the euro. Euro links in very much with the majority of risk markets that we've seen the movement with recently. But there's a very significant move, I think, developing within those markets and across which will affect a lot of the other key risk markets, the likes of the Aussie and the Kiwi, CAD, markets like that as well, and potentially even going into markets like gold and silver. But I just want to go through a few things with regards, focusing on the dollar, as I say, dollar and the euro dollar, just to give you because I do think there is something significant building here. This is the euro chart, euro daily chart. We can see it's been a bit messy, but I'm just going to talk you through where I think we're headed. At the moment, I'm looking for a move back down to 110 on the euro. I had thought we could get a little bit high. You can see the box I have up here at 115. I'd really like to have been a seller in here at 115. At the moment, I'm being a seller at 130, 113.50 on the rejection in here. Go down into the hourly, you can see the way we had the field breakout and a rejection, a retest in here. So that wasn't the plan originally, but you can see the price action struggled at that level of resistance. That's where I've got my first short. Plan now is I do see the euro heading down to 110. We'll see the nature of the price action, whether I'll get more options or not to sell. On the flip side of that, the dollar holding a nice little level of support down through here. The flip side, euro at 110 would be taking the dollar up towards 99 at least. That's near term, just looking over the next couple of weeks. There is potential a lot further than that. I just want to talk you through why I think that is the case, to give you the picture behind it rather than just my opinion on it. Looking at the seasonal stats, a lot of you might be familiar with what we have on our website already. Looking across the seasonal stats, though, as say we get into July, it's actually generally a fairly bullish, or historically a fairly bullish period for a lot of the currencies. The majority of them in green here, and one of the main losers out of this bunch is actually the dollar index. The dollar index typically is negative through July, and looking over into the seasonal patterns, you can see the dollar index doesn't typically do an awful lot through June, after sort of a week move towards the end of May, which we certainly got. We didn't do an awful lot in June, and typically we actually see weakness through here historically in the dollar. On the flip side of that, a lot of the currencies tend to do well early in July. You can see the pound as well, the Aussie was there, euro in particular as well is another currency that historically does well through this period. However, there's a couple of things that look like they're influencing this, and was given my bias to be on the short side, be preparing for the short, and that's changing the seasonal pattern and only looking at election cycles. Now we know 2020 is an election year. We get the US election in November, and if we see here the purple lines now we have on this chart, just zoom in and we get a good look at this. See the purple line on here. This is the dollar, US dollar during election years, and you can see the position and the movement is typically very different as we head through the summer, historically looking at election years in isolation, whereas we historically the blue and the yellow lines, we see them moving lower through during election years. The dollar actually performs very well, and particularly again if we see the flip side directly getting into the euro. Whereas you would historically see the euro going higher, we actually typically see the euro going lower through election years. Now, when we're looking at seasonal cycles, we need to try to determine which one the market is always following. One key is to look at the price action and to see what cycles the market is actually doing. But broadly, up until this point, a lot of the cycles are actually very similar, particularly in the dollar index and the euro. It's only now where they start to diverge. So there's not much in terms of clues because the patterns generally follow the same path, and the price action, if we look at particularly at the dollar index, how we've been broadly following, the dollar index has been very close to its seasonal pattern this year so far already. So we're getting to this point, we're trying to see which one are we going to follow going forward. That's where looking at the commitment of traders comes into its own, trying to see what's actually going on behind the scenes, where what the buying and selling, what traders are actually preparing for, and where they see markets going. And what is interesting is, particularly if we look at the commercial short positions in the euro, over this last couple of weeks, we've seen big accumulation by the commercials on the short side of the euro. They've got up, set multiple all-time highs on the short side. Their longs aren't as low as what ideally you would like in terms of the position for a really bearish signal, but certainly looking at where the commercials, how they're positioning themselves, the fact that they've been building up this all-time low, considering we're only here sitting just between 113, 114 level, and it's the largest short position they've ever had. Looking here as well, I've also applied the dollar index data, the commercial dollar index data, onto the euro chart here. You can do that when you come in. You can cross-analyze and look at correlation between markets, and historically, whenever we see low levels of selling, commercial selling in that market, we typically see the dollar index rally. And we get to the point now, it is the lowest, it is an all-time low in commercial selling in the dollar index. It is an all-time high in commercial selling in the euro. So clearly there's something building here, and what they clearly believe, is what this suggests, is that they believe that the euro is heading lower and the dollar is heading higher. So combining what we can see there from the COT data, the latest COT data, obviously this is Thursday afternoon UK. I'm making this. The next release will be tomorrow evening. And obviously I'll be straight in to see if there's a continuation of that, but I'm not expecting much of a change given the positions we're already seeing. So with that, well, what we can see, my view is that we are most likely to follow this election cycle, which, look at the price action on the euro, we can see there's a lot of weakness. We've really struggled in this area. We've seen a nice move earlier in towards the end of May. Little retracement from there. If this market was bullish and had the impetus to continue going, we should have done that before now. We've really struggled in here this last couple of weeks, and it hasn't had the follow through in it. The plan A originally was to be a seller at 115. As it stands at the moment, we've struggled in here, really struggled. Give a really nice field breakout above that 113.50 line. Give a really nice area. Classic field breakout here. Come back into retest. So really easy sell. I will be taking profit. Some profit off the table around 112. I'll look to add in below 112 as long as we can clear through it. But at the moment, my view is we're heading to 110 for the euro is the near-term plan. As I say, that the reason being is the election cycles that we can see going ahead in terms of the dollar driving that market higher, and the positionings that we see in the COT data is very much in line with what you'd expect to see for a dollar rally and a euro decline. Okay, I'll be talking about this more on Monday night on my usually weekly webinar. Feel free to join in and ask any questions regarding that, and I'll certainly be talking about this in a little bit more detail on Monday.